weekend all. Ira Epstein of Linn & Associates with your metals market update. And this is your weekend edition of your metals market update for Friday, the 12th of April, 2019. We're pushing 4:15 in the afternoon, and it's an interesting week. First off, let's talk about what I do in this video. I'll start you off with one monthly chart, and then everything else is going to be weekly charts because we're looking for the bigger picture on the weekend. Now, one of the things I intend on doing soon is starting off with a Monday night video, but it's only going to be for my subscribers to get them going into the evening session. I haven't decided which Sunday I'm going to begin it with, but it's right around the corner. I put in a whole studio in my house. We think we've worked out the bugs as of today, and there's always bugs when you're building a small studio and you're trying to get things going. But a week of interest. First off, the stock market. What are you? You're less than 1% from the all-time highs in the S&P, about 2% in the NASDAQ. We know the Dow's got catch up because of what? It got caught with Boeing and some other issues in there, but even those stocks are starting to rebound a little bit. In the metals, though, what the question is what's going to happen in the dollar and what's going to happen with U.S. interest rates. We got down to around 2.44 in the 10-year notes, and then we came back to 2.54. We saw today, and that impacted markets, that China's numbers for March, their export-import numbers, were much better than they were for February. I don't know that that's a trend yet. We had the lunar holiday that went on in February, so they get skewed a little bit, but we'll see. Trade, of course, those are the issues that's on everybody's mind, and we heard this week, of course, the U.S. and European Union are threatening each other with tariffs, but on Thursday, the EU also said they're ready to start negotiations. So is it posturing? We'll find out. I think we're closer to an end of finishing up a Chinese trade deal than people think, and maybe even the old NAFTA deal. So when we look at gold on a monthly basis, and that's all that this is, you can't get away from the fact that the market's just sort of where it's been for 2 years. Yeah, 2 years. This is a monthly chart. You've been stuck at this 18-month moving average of closes on a bigger picture. Yes, you've had swings from the upside to the downside and back up, but at the end, this is where you're ending up, and you're not pushing out or pushing down. You just seem to be stuck right there. On the weekly chart, we now have the first 2 weeks. This week it happened right here. You closed underneath the 18-week average, and you followed through with a little lower close to say under that. Now, was the close for the week down? No, it was up 0.2, but it's still the second week under that 18-week average of closes. When I look at the chart pattern right here, I can see that I peaked, came down, came back up, and made a lower peak. All right, you can see that right there. And you see that how this is shaped up. You have the lower highs and lower lows. That is a bear pattern. When I put on the 18-week moving average of closes in red, you can see you're under it, and the support's back at the 100-week in the 1276 zone. So who's in control at this point? With the swing line down, the trend is down. The bias is down because the market's under the 18-week average of closes. You're nowhere near the upper Bollinger Bands or the lower. And remember what Bollinger Bands are? They're an algorithm designed to keep the market trading within them 95% of the time. The importance is when you break out of a sideways pattern, so to speak, it's not uncommon to run the band and then pull back and keep running against it until the trend runs itself out. And you see that when the swing line changes. So you've begun another leg to the downside. The question is, does it have steam to it? In terms of momentum, it says yes. So the trend is down, the bias is down. 1276 is a potential target for support, with the 1294 average seeming to be what the market's drifting against. When you come to GLD, it's very, very similar. Lower highs, lower lows, under the 18-week average. Remember on momentum, when I go to the weekly charts, I do not look for overbought or oversold. I'm simply looking for which way is the momentum pointing. That seems to be a better handle on the weekly charts, at least I believe that is, than the daily charts, where it does get overbought, oversold, or embed. I don't believe it embeds on the weekly charts. I've gone back and that's the conclusion I came to. When I come to GDX, it's a confusing chart, different than the other two. Why? Number one, you've got two layers of support right through here, 2185 to 2186, the 100-day average and the 18. The pattern is one where the recent part is a lower low, and then you had the higher high first. So the market stepped out of a trend. It's coming into the support level. It's hit, as you can see, this 100-week average numerous times and turned back up from there. The question is, if you break through it and stay under the 2176, what does that do? And if it happened next week, I would say the market enters bear market territory again, because it would have then lower highs, lower lows. The bulls, they have to support the market here and not let it do that. In the gold-silver ratio, you're going back up for historic highs, which means even when you watch the silver, just understand, when you look at this ratio, it tells you that silver is not gaining on the gold market. And you see that on the chart pretty clear, with the lower highs, lower lows falling away, momentum still down. Are you putting into play the 1455 level? You might be. The resistance back up at the 18-week average at 1537. Even if you rallied here over 1552, that would not begin an uptrend, because you can't get away from the fact the lower and low. So if you took that out, you'd have a lower and low, higher high. It's easier for the bears to keep control of the market. Copper's void of a trend. Copper's got the higher high, lower and low. Momentum has gone flat, which isn't bad. It's still to the upside then. The 100-week average, not the 18-day, seems to be what the market's paying attention to, with Bollinger tops. It seems to be caught in there. And the logic here is, if China's doing better, they'll need more copper. That's the thinking. A trade deal would put copper back into play. I think traders would say, that's good for world trade again. In the platinum market, you got up to resistance at the 100-day average in the upper Bollinger Band. So the market, in my opinion, at that 893 level is in a real area where the market may be running out of momentum. Not turning bearish, just run to a point where it's got a lot of resistance, while the palladium has turned down. I think I used the word in my other videos about the bubble burst. And I'm going to contend that that bubble did burst and the market is stuck here. Now, to start a potential recovery, I'm not saying another bull move, you'd have to get over 1403.50. Take out 1312.90 and this pause may end and you may shoot down again. So the battleground, 18-week average of closes, 1375.90. And of course, leaning on everything without a trend on the weekly chart is the dollar index. It's got lower highs and lower lows, but it needs to close back under 96.34, the 18-week average, to turn it down. You know how I start you off, excuse me, it's allergies. How I start you off, or try to start off my subscribers each morning, is by starting with the video for them. And I try to get it out by 7:30 in the morning Central Daylight Time. I used to do it at 9, now it's much earlier. I think I can even beat that time very shortly. I'm up anyways reading, so it doesn't matter. You know, when you get married to these markets, you're turning on the news, you're reading, and I promise you, by the time I get to 8 o'clock in the morning, I have a pretty good handle what's going on around the world. I cover all these markets in different charts. I put out 45 charts on average. I cover 5 ETFs and the different futures markets. And I'm going to tell you what I think the pros are doing, what the chart action looks like. If there's fundamental news like the import-export news that came out in China this morning, my clients had it first thing. And of course, specific trade ideas. Yeah. In this video, in the morning, I can say buy here, sell there, do this, because it's user protected. In other words, you have to have a user ID and a password in order to see it. And yes, I don't give it away free. I want to be paid. I get 26 cents a day. I want you to listen to what I just said. I think it's 26.5 cents a day for you to give it a try the first 30 days. After that, you can decide you want a yearly subscription, $156 a year, or go 30 days for $15 a month after that. No contract needed. That's simple. How do you get this? Go to our website. It's right here, www.iraepstein.com. On the website, go under Research or Education to Ira's Morning Subscriber video. Give yourself a try. What are you going to be out? $7.95 if you haven't tried it? I'm Ira Epstein. Have a good week.